Hey everybody, my name is Joe Pivarunas. I'm the founder and managing editor of Nanoeyes. We're a boutique media and research firm covering disruptive tech stocks for a broad audience of retail and institutional investors across the globe. Today we're going to talk about a company called Nano Dimension. The title of this slide says, Nano Dimension stock is no bargain. And before we get into talking about that, I wanted to touch on something that came up recently in the comments, and that's people asking us about how we choose which companies to cover. Well, what you may not be aware of is that we've been publishing research pieces for about 7 years, articles that we publish at our site, analyze.com. And most of these research pieces surround the 38 tech stocks that can be found in our portfolio. That's a real live portfolio that we manage. Or they're about some of the 420 tech stocks located in our tech stock catalog, which is available to subscribers. And of course, the people that pay the bills, they'll often request stocks, and when we see demand for a particular company to be covered, then we'll cover it. And then this last category, that's why we're covering Nano Dimension. So it's a stock that a lot of investors talk about, and it's also a stock that we first wrote about back in 2018, and then again in, 2021, and now we're going to talk about it in today's video, and I'll put links to our prior research pieces in the description of this video. Now, if you go on Twitter, search for the ticker Nano Dimension, and you find a lot of comments like this. It seems to be the thesis du jour of investors on Twitter. So people saying Nano Dimension is the best deal on earth, $800 million market cap, but 1.5 billion cash. And people talk about, you can see currently trading for less than $1 billion, yet has 1.4 billion in cash. So the basic idea is that the value of the company, the market cap, is significantly less than the cash on the books. Now, what these individuals need to realize is that cash is simply one component of a successful business. So if you're an entrepreneur, you've got to have really three things: an idea, capital to fund your idea, and you have to be able to execute. That's probably the most important thing. So you see a lot of entrepreneurs out there with an idea. They'll go get a domain and they'll muck around for a while and then give up. But what it comes down to is being able to execute. So you can throw as much cash as you want at a flailing business, but if they can't execute on it, then that's a problem. So when we look at the background of Nano Dimension, they first began trading in 2016 in the United States via a reverse merger. So they're a uplist from the over-the-counter, and we've never looked favorably upon companies that uplist from the over-the-counter exchange. Another example of that would be Organovo. We first wrote about this back in 2018, and we noted that the co-chairman of the board of directors was one of 3 people arrested on suspicions of money laundering, fraud, and securities. At that point, when we see things like that, we just don't follow up at all. That's done. Now, what ended up happening with this, we don't know. There isn't a lot of information. Clearly, the companies distanced themselves from this individual, and that's done and dusted behind them. At the same time, we noted lots of paid research reports. That's a huge red flag when a firm pays analysts to say favorable things about them. And then we have the release of products starting in 2017 when they released their first professional 3D printer. July 2019, a new printing technology. November 2021, another new printing technology. And the end result is this slide, which shows the money that they've taken in. Now, recently in 2021, that boost of over $10 million in revenues means they now have meaningful revenues, which is great. 7 million of that came from this company that they acquired called SM Tech. So what we're going to talk about today is the companies, what they present about their plan going forward, and the companies that they've acquired so far. So in looking at their investor deck, there's a lot of things in there that are a concern surrounding how they talk to investors and the sorts of things they say. You can see here's one slide in their investor deck. They say what it is not, so what this investment isn't. They are not a company that will show in the short term revenue and profit growth on a quarterly basis. Well, that sucks, because that's kind of what we look for, at least when it comes to revenue. We look for quarterly revenue growth. So if they're not going to be able to show that, then that kind of makes that conversation real short. And the second bullet point says they won't pay inflated prices for acquisitions in order to accelerate revenue growth. That's great. They've got somewhere around 1.2 something billion dollars in cash on their books, and presumably they're going to use that to acquire growth because the printer that they've been developing doesn't seem to have been able to get traction. So here are the companies that they've acquired. It says 4, it's actually 3 that we're going to talk about. First is DeepCube. They acquired them for around 66 million. They operate in machine learning, deep learning. Then you have Nanofabrica. They operate in micro and nano manufacturing. And this last one, SMTech, is a Swiss firm, been around since 1991, that produces equipment for placing and assembling electronic components on printed circuit boards. And during the year, they also spent $41.68 million in R&D, and that's worth noting as well. So starting with DeepCube, the amount of money they purchased the company for, 66% of that was goodwill, and then they describe that here as mainly attributable to the skills and technical talent of DeepCube's workforce, the technology, synergies, etc. Now, in looking at what value DeepCube brings to the table right now, that's a whole lot of cash burn. So $66 million pro forma losses in 2021. That means if they acquired this firm at the beginning of 2021, it would have lost $66 million. No revenue contribution stated. So they're right. They're definitely not overpaying for revenue because they didn't purchase any in this case. So second firm, Nanofabrica, founded in 2016. They have $4 million in disclosed funding. Pro forma revenues for 2021, 10.5 million, not bad, but that's against some meaningful losses, around 66.5 million. And then 47 million they paid, 70% of that was goodwill, same reason as previously given. So the piece we just published prior to this talked about goodwill for a company called Teladoc, and goodwill is about when you go to purchase a firm and the price you're going to pay exceeds the assets they have, then your accountants get creative and put that in a bucket called goodwill. So that's what they've done here. It's generally frowned upon because it isn't quantifiable. So that's at least the perspective we take. You see the cannabis industry does this a lot because they're in such a frenzy to acquire their competitors, they're willing to pay any price. Now, the third acquisition that Nano Dimension made is the more interesting one. So this is a Swiss firm founded in 1991. From November 2nd, 2021 until the end of the year, the contributed revenue was around 6.283 million. So that's a good chunk of that 10 million that they realized. And the profit, it's profitable, nearly $1 million to the group's results. That's great. So if they looked at that pro forma, meaning if they acquired that company at the beginning of 2021, pro forma revenue would have been around 29 million, almost $30 million. That's great. And then they say the unaudited pro forma profit for the year would have been 65 million. Well, it's hard to see how 65 million in profit could come from 30 million in sales. So we need to see this properly consolidated in the next quarterly earnings of Nano Dimension. Hopefully all these acquisitions will be consolidated and we can get a good picture of what revenues look like and what burn rate looks like. So going back to their investor deck, again, very odd. Here's a slide that they present and it offers up the probability of certain things happening. They're all, negative things, right? And for whatever reason, we've never seen anything like this. They say the probability of failing in certain acquisition integration is medium. Probability of failing to achieve timely R&D goals, medium. Probability of not delivering products to market on time, medium. So what does that mean? Like, what are they trying to tell investors? This is very odd. And you can, one way to look at it is that they're being honest about what they expect, but why would you acquire firms and then have this sort of expectation about what you acquired? It's almost as if they're setting up the expectations in the same way they talk about don't expect quarterly, revenue and profit to be growing. It's kind of that same sort of thing. And frankly, it's concerning. Now, when we look at the cash situation, so they have just under $1.3 billion on their books, and that should last them quite a bit of time. They can certainly do a lot with that. But again, you're simply paying for a firm's management team to take this money and do something with it that creates more value in the future. This is a firm that hasn't been able to successfully commercialize their current printer offering in terms of meaningful revenues. So why would you think that they would then be able to add more complexity to that and then have a success story? We don't believe that. It's a very compelling case. Now, here's why they think you ought to do that. They say they're well financed. They've clearly spent some of their cash. It's around 1.3 billion, not 1.4. Here they talk about their current stock price and say, you know, upside relative to cash and business plans. Well, we've never seen a firm really talk about that, but the share price is trading a lot lower than that right now, somewhere around $2 and something a share. So I'm sure anyone who went on board as a long-term shareholder after reading this slide probably isn't too happy. But they also talk here about prominent institutional investors, and that brings up ARK. So we've always been extremely puzzled as to why ARK backed Organovo and Nano Dimension. These are two firms that, frankly, Organovo has never had a strategic direction. They're still looking for one. They have a lot of dirty laundry that's being aired with their previous founder. The whole thing is a mess. And this firm, since we looked at them back in 2018, we said we just wouldn't touch this company. They just don't appear to be able to do anything, right? And they talk about these 60 Dragonfly systems that they've sold. They talked about that back in 2018. Well, where's the money? And the fact that ARK made some remarks, at least according to this firm, saying that they really trusted the management team and all this story, and they're really investing in a team with a dream. Well, ARK has a track record of talking to management teams and believing the stories that they tell them. And oftentimes we'll be approached by management teams who don't like our critical eye and say, why didn't you talk to us? You know what? You never get anything of value talking to management teams that are trained to speak to the press. They offer up nothing of value. They just get in the way. And where you find the real raw data that's useful, that's insightful, that's in what they tell the SEC, and that's where we look. So here we have them talking about $17.2 million in cumulative revenue over 3 years. Well, we've never seen a firm that talks about how much revenue they made over multiple years. That's odd. And then they mentioned this biotech investment model, and we're not really sure where that's going. But when you look at how much this firm has diluted existing shareholders, so let's say you bought in around the time when they had their IPO back in 2016. At that time, let's say, we don't even know how many shares they had outstanding, but let's just go back to December 30th of 2020. They had 6,441,000 shares outstanding. That jumped to 257 million by the end of that year. And then as of the end of 2021, 386 million. Shareholders were diluted by 5,900% in just 2 years' time. That is absolutely remarkable. So I guess if you take nothing and dilute it, you still have nothing. So the firm didn't really have anything of value from what we were able to deduce. And if they take that up and they split it up a dozen different ways, who cares? If you look at the value of the share since they had their IPO, I believe in 2020 they had a reverse split, 50-to-1 reverse split, probably so they can stay listed. And they may have to do that again to stay listed. They have a market cap right now somewhere around $700 million. But they've lost 96% of their share price value since the IPO. So if you're looking at the performance of this management team to create shareholder value, you're really looking in the wrong place. Now, we look at valuation because they've acquired a firm now that has meaningful revenues, or let's say enough to give them meaningful revenues. Their $750 million market cap divided by the annualized revenue since last quarter gives them a simple valuation ratio of 25. We wouldn't consider that excessive. You could benchmark that against, Exometry, Protolabs. It's going to be higher than those firms, but it's definitely not excessively overvalued. But again, that ratio is largely useless when they tell you that in the short term, don't expect revenue and profit growth on a quarterly basis. And I guess the only thing that we're paying attention to there is the revenue growth. So if we're not expecting revenue growth on a quarterly basis, what's the point, right? So that ratio really gets thrown out the window. Now, I've also noticed that there are quite a few fans on Twitter, and these are usually the type of people that come around and start making baseless accusations. So we're going to talk real briefly about things we're not. We're not short the stock. We weren't paid to write this article. We're not in cahoots with their competition, and we're not assuming everyone is stupid. Any other baseless conspiracy theories that you come up with, those are false as well. We're simply looking at a stock that is quite popular and talked about a lot and applying some critical thinking to it in the same way that we look at every single one of the 420 tech stocks in our catalog that we've written about. So just to conclude, to the people that are saying, well, the market cap, is significantly less than the cash on hand. Well, cash alone isn't what creates successful businesses, and we don't invest in teams with dreams. ARK Invest does that. We don't. We also don't invest in firms with a market cap of less than $1 billion. And when you look at that investor deck, honestly, it's downright scary. In their letter to shareholders is very, very odd. They talk about how they have institutional investors, and they seem to be implying ARK. And they say we have institutional and retail investors, and the institutional investors talk to us, and that's okay. But the retail investors, they never talk to us, so they sell shares sometimes without talking to us. It's very odd. It's this sort of language that raises a huge red flag. We've been looking at firms for a very long time. This sort of language is a concern. So we wouldn't touch this stock at any price. We may look to see how they've been spending that cash perhaps next year. It'll be interesting to see what acquisitions they can make. And of course, they still need to consolidate all these acquisitions and integrate the technology so they can realize synergies. What we imagine will happen is that they'll start to have a pretty big burn rate, at least from the pro formas that they've shown. So we'll see what that looks like, and we'll give them through the remainder of this year to finish making some acquisitions and consolidating things. The only reason we'll take another look at it is because there's a lot of interest around the stock, and of course there are sometimes the man bites dog stories, and there certainly could be a turnaround. You can never exclude that. We're always open to seeing what firms are able to do, and you can never discount anybody. But this isn't a stock that we're interested. There are much bigger fish to fry, a lot of more interesting stories out there. It's just something that we would never consider investing in. So thanks for taking the time to watch this. Please put your comments, questions, concerns, feedback on the video. As I said, we'll publish the research piece links there. Thanks so much for taking the time to join us for this video presentation today.